wonderful good afternoon all together. It's Markus time, Wednesday afternoon. Nice to meet you. Today we are going to talk how to create a successful trading plan based on special topic, fundamental analysis. And I'm really happy that you spend your time with me, including the following topics. Why is your business plan so important? What are the useful fundamentals? Creating a proper strategy, and of course, how do you combine fundamentals with your strategy? And make sure, guys, that you stay online until the end of this webinar or the end of the YouTube video later on YouTube, because when I'll be showing you why fundamentals like COT report or seasonals are the most famous data you can use to support you in your own trading. So my name is Markus Gabel. In the case you're the first time here in this webinar, and I'm a professional analyst, speaker, trading and life coach, of course, and I love trading. I'm a real trader with real accounts, and I've been trading the global markets for over 22 years right now. And if you want to have more information, no problem, send me an email if you want, or visit my homepage, tradingandpersonality.com. In this webinar series, Trading Spotlight, I'm partnering with Admiral Markets, which is a Forex and CFD broker with over 8,000 different financial instruments through one of the world's best trading platforms ever, MetaTrader 5 or maybe MetaTrader 4. Finally, ladies and gentlemen, if you're watching this on YouTube, remember to like this video, share it with other traders, and subscribe so you will never miss an episode. Okay, ladies and gentlemen, I'm really happy that you be a part of this webinar this afternoon. I can see a lot of guys this afternoon, really happy about that. And I appreciate it a lot that you spend your precious lifetime with me. So it's my mission to give you the next around 40 minutes, a lot of content that maybe it's valuable for your own trading. So please feel free. If you have any questions in your mind, is something driving your mind, type it in the chat box or in the question box. I can see it here on the right side of the chart. And let's have a lovely communication to each other. Maybe we can let a little bit debate about this special topic. And sometimes I will give you a question, and I would appreciate it a lot that if you want to give me some answers, because it's a kind of communication. I'm not the entertainer here, because it's the webinar we're doing for you. I'm really happy that we have this support by Upper Market. So let's talk about the business plan, why it is so important. I want to quote Mark Twain, because he said, if you don't know where you're going, you will end up somewhere else. I guess this quote speaks for itself, because you always need a plan, whatever you do. The problem is, you can see it on the bottom of this slide, 81% of all retail accounts or retail investors, traders, lose money when trading CFDs and Forex with this provider, but not only with other markets, with all brokers around the world. It's always almost the same number between, I guess, 75 and almost 90% of all traders lose money. Because why is it? They don't have a plan that works very well. So let me ask you something. Do you have a business plan for your trading business? Please type it in chat box, yes or no. Do you have a business plan for your trading? A chat box is open, type it in, yes or no, yes or no. Do you have a business plan? If not, then maybe it's time to listen very carefully to me this afternoon. Maybe this could change. Maybe this could be a game changer for your trading as half a business plan. Yes, I love it. Half is better than none. This is really good. You don't have one. Okay, it's not a problem, but I want to explain you why is it so important to have a business plan, and about the fundamentals, of course, you need it. So the question is, you can see 80% of all traders fail in trading. So open Google, type in trading business, type in, make a search about, type in trading strategy, only trading, and you can see you will be overwhelmed about the mass, almost limitless universe of information about trading around the world in almost every language. You can read, watch videos, whatever. But even we have all these strategies, everything is explained, almost everything is open. But you can see on the bottom of this slide, more than 80% fail in trading. So we have to talk about it. Why? Why is it? First of all, we need to understand that trading is a serious business. Unless you don't want to become successful, it is a serious business as long as you want to become successful in the long run. So let me ask you, who wants to become successful in trading? Type in E, me or not? Yes or no? Do you want to become successful in trading? Type in the chat box, yes or no? Let me know. Do you want to become successful in trading? Yes or no? Type it in. Yes, John said yes. Jordan said yes, of course. What's about yes? Yes, please, Ethel, of course. Yes, you want to be successful in trading. Ah, great. That's all. Oh, Boris, yes. Okay, wonderful. So I got a lot of yes here. And if Yolua, right? Okay, wonderful. Yes, Ivan said yes. You see, all of us, we want to become successful in trading. And I guess you want to become successful in the long run. And Ivan said yes as well. Thank you very much. Great. I love it, guys. So, but first of all, we need, or maybe I should say it's a duty, that you understand that trading is not real trading. Serious trading doesn't mean gambling. If you want to make gambling, then you can make a gamble of football or basketball or tennis or whatever. But trading, serious trading, on the long run is not gambling. Trading is like a serious business, like maybe having a butcher, or maybe a butcher shop, or maybe a bakery, or something else, whatever, or online shop, whatever. It is a business. And to be honest, would you open a business like a bakery for, of course, without having a plan to buy your machines, to buy all the stuff, ingredients, whatever you need? So try it. I did it. Try to go to the bank to get a debt or credit, for, of course. And the first the banker will ask you is, do you have a business plan? And if you say no, then the banker will say, goodbye, come back if you have a business plan. Why do you need this business plan? Yes, Mark Twain, if you don't know where you're going, you will end up somewhere else. And this is the point why 80% or more than 80% of all traders around the world lose money, because they never will know where they have to go. Okay, let me be honest to you and completely frankly to you, the offers about trading around the world could make you really confusing. It's overwhelming. It's a mess of all information. I know that because I lost everything in my life to trading. Because today, and my mentor asked me this first question as well as almost 20 years ago. And he was asking me, Markus, do you have a business plan? And I said, what the hell is a business plan? I want to become successful. I want to make money in trading. And they said, okay, come back to me if you have a business plan. So, and I ask you the same. So Wayne says, I've recently lost 50,000 in Forex because my account manager didn't know what he was talking about. That's why I moved brokers. Wayne, do you allow me to be honest to you? Can I be honest to you? It's not about the broker. It's not about the account manager. Maybe he didn't know what he's talking about. But you were the one who will make the trades, right? But maybe you are the lucky guy today, because here at Admiral Markets, you're completely right. Because Paul, Jens, and myself, our team, and the hosts beyond the team, we do everything to make you to become to help you to become successful. But please never blame the broker, because we are the one who make the trades. And here you can see, and thanks Wayne for this really honest sentence and question, because let me comfort you a little bit. Join the club. So we work in all the same stuff in the same circle around, and but there is a big chance to become successful in trading. But this is the first one, and you agreed that you don't have a business plan. So that's the result: losing money. And then it's easier. It's a human part. First of all, we always blame the others. And maybe should I tell you my little bit secret? When I lost my first money and I had a mentor after 7 years by try and error, then I had a mentor. And with my mentor, I wasn't successful. I followed his plan and I followed his advices, but I wasn't successful. And after 1 year, I said to my mentor, you don't teach me the right way. I'm not successful right now. And I were blaming him. And he smiled to me because he was a big lama, was a big teacher. And I'm really grateful for that because I love that guy. But he said to me, who is making the trades? Me or you? And I said, yes, me. I do the trades. Okay. Did you follow your rules? Did you stick to the rules? Did you always follow your plan? And then I have to confess, no, damn it, no, I don't. And I didn't. I said, so who is guilty? Who has to blame which one? So you see, we have to talk. My equity curve has begun to stagnate. That's, John, that's a normal part. That's absolute normal part. Sometimes we have losers, sometimes we have winners, but we need a plan, of course. So, but this is the first pretty understanding that you have to make a business plan. What do you have? How much experience do you have? How many books did you read? How many money do you have on your account? And what do you want to reach with your trading? Yes, I know we want to make money, but as Wayne mentioned, 50,000 euros gone. So why is it? Did you have a plan? And if I ask, do you have a business plan, or did you have a business plan? I said, no, I don't. So that's the consequences. So what's the plan? Of course, a trading business plan. And please understand it. And you know, maybe you followed my webinars a couple of weeks, and you know I always try to explain the topic of Isaac Newton. He figured out, or he discovered, not he were found it, he discovered the tenet of the gravity. But there was a deeper tenet beyond this gravity, and it was cause and reaction. That's the point. So, and always the cause is always smaller than the reaction. So not having a business plan is a small thing, but lose $50,000, that's the big result. That's the big reaction. So we have to work, we have to figure out the deeper causes of trading, and having a business plan is one of the deeper causes. A trading business plan contains a full outline of your whole trading business and guides you like a so-called red line and helps you develop self-control and habits. So for example, I only make personal coaching. I don't have a community. I only make personal coaching. And before I start to coach someone, I require a trading plan. So I can develop about that a red line. I want to know, where do you come from? What's about your family? How much money you have? And where is your goal? And when? When do you want to reach your goal? When? A complete, a correct, and a specific date. Maybe we say, I want to become successful in trading. But the first question I ask you is, please, when? This year, next year, over next year, in 10 years, when? Look behind of me. Look at this one. There's my hourglass. Did you ever realize that your lifetime is limited? How will you know if you can wake up tomorrow again? I guess you think you do, but do you really know it? Do you have a guarantee that you may wake up tomorrow again? Don't forget it, guys. This is a question of time, and this is a question of it's a business plan, you know. So, and because I see it here, look at this one. I wanted to wear today. It's a little bit funny. Katie, look one. I wanted to wear today this Admiral Markets T-shirt, but I tried it, but it's a little bit, how should I say, too tight. It's it looks like a little bit funny, you know. But you know, it's it doesn't fit really well. So I wanted to show you this one because it's a wonderful, lovely T-shirt, and I love it, but not in front of the camera, of course not. So maybe you have too many things to love about it, but it's a kind of humor, of course, you know. Okay, let's go on a little bit. So the business plan, it should help you to create a so-called red line. Where do you come from? Where are you right now? And where you want to go? And such a plan will help you to find your own trading tactics and your own setup. And it will help you, or it will help you to figure out where are the crucial points in your trading. So, for example, in our trading spotlight community and Traders Yard, John told me he were really successful on a demo account, and he made a back test, but now he's on a real account and he lose money. So, and I asked him for, of course, why is it? Where is the difference between a back test and trading on a demo account and trading on a real account? That's the crucial points about your strengths and weaknesses. Do you know your weaknesses? Do you know your strength? Most of us, me as well, we know our strength. Oh, I'm good in that one. I'm really good in that one. Oh, I'm really good in that one. But if I ask you, where are your weaknesses? I guess, so maybe just a second, close your eyes. Think about it. Where are your weaknesses? Could you give me an answer right now? I think you have to think about it. But if you want to know where all your weaknesses are, I have a special advice for you. Ask your wife, ask your girlfriend, or ask your boyfriend or your husband, whatever is there around you, or your best friend. So those guys will tell you your weaknesses indeed. I promise you, ask them, and then you know that. But of course, they have to be a part of your business plan. So for example, if you are such like a calm and a comfort guy, it makes no sense to make day trading. Or maybe you have a normal job where you have to work from maybe 8 a.m. to 5 in the evening, or maybe to 7. I have a client in London, of course. He has to work from 7 in the morning to 7 in the evening. So I taught him and I coached him and I said, you cannot make day trading. It's not possible. You have to focus on your job and not on trading. But this must be a piece or part of your business plan before you start with trading. Before you do that, to figure out who you are while you're doing trading could be very, very expensive. Such a trading plan will help you to figure out your next steps to grow from a beginner to advanced trader. So let me ask you, do you want to know the truth, how long it will take to become successful? Who wants to know? Tell me, yes or no? Do you want to know it? How long do you need for that? Yes, just only one. 1, 2, 3. Yes, Nevin said yes. T said yes. Yes. Okay, I got a lot of yes. I guess you don't want to know it. You have to decide if you want to. Sandra, greetings to Colombia. How are you? So you have two options, guys. Okay, without having a business plan and without having a mentor, I guess you will need more than 7 years. I promise you that, because I made this experience. I tried it 7 years to become successful in trading. I'm really not the smartest guy. So when I was a young guy, I was young and stupid. Today I'm old and stupid, of course, but I'm really not the smartest guy, but I know what I have to do. I knew what I have to do, but I was not successful. Then I met my mentor, wonderful, my Lama, and he told me. And then after 2 years with working with my mentor, then I became successful. And today, I guess I am successful. And this is what you have to do. Make this decision. You want to try it by yourself, then the chance is really less that you become successful in this lifetime. Do you have a business plan and maybe the support by a mentor, by a good coach? Then you can cut the time, I guess, 1 year. So I guess if I have the experience by my clients, round about 1 year, I need round about 1 year to make people successful. And then you can start with making experience by yourself, but then you will know what you have to do and you have a business plan. So that's the answer. Try it by yourself. And I promise you, I really promise you, you will take years and years and years. Why? No one will show you the deeper course of trading. You only have a look at the obvious things. Believe me that, it's my experience. But never forget, guys, you see the hourly glass? Don't forget, your lifetime is limited. So that's why you need a so-called business plan. Now let's make a switch. Do you have some questions about the business plan? Then type in, we can create a completely new, or if you follow, look at the YouTube video, the YouTube channel of Admiral Markets UK, of course, I made a special webinar, I guess it's month ago, last year, I guess 2019, figure it out, type it in business plan. I held a webinar, special webinar about business plan. There I told a lot of things what you can, what you need, or what a business plan should contain, of course. So if you have any questions, please then type it in the chat box. Now let's make a switch to fundamentals. And I love this wonderful pig. This is the chicken with the eggs. So why is it? So if we talk about fundamental information in trading, what is more useful? That's the question. Technical or fundamental analysis? So what do you think? What is your private opinion? What is more important? Type in the chat box, please. What is more important? What do you think? It's more technical or more fundamental analysis? Or do you think both of them? So what do you think? Type in the chat box, please. Let's make a little bit. Please conduct a webinar about banks' role in Forex. Oh, Katie, would you type it, please? Please make a note, because Abram asked for a special webinar about banks' role in Forex. Well, let's do that. And I know Katie is today my host beyond the scenes, and he will make a note. So okay, fundamental analysis, I can see tech and fund, both of them, technical, both technical. Okay, you see, we have mixed information, mixed answers. But let me tell you this one about my experience, 20 years right now. The question is as old as another one. Which came first? The chicken or the egg? I don't believe in technical. Okay, so which one came first? The chicken or the eggs? I guess this is a question, what do you believe? So if you believe on our Holy Lord, the Creator, then I guess we had first the chicken. But if you think so Charles Darwin and his evolution is the right one, I guess then the eggs was first. But I don't believe that. I think we had a great Creator, because I'm a great believer in my Lord. And oh, I don't speak Spanish. Sorry. Of course not, Anna. Please in English. Thank you. So traders have discussed this topic since the birth of trading. It's in general debate. It's a general debate. The answer is really quite simple. How? How so? Why is it quite simple? Technical or fundamental? Look at the first tenet of the Dow theory. Look at this one. Charles Dow figured out 1879, everything is discounted in the chart or markets at that time. Everything had that supply and demand influences you can see in a chart. You don't necessarily need fundamental analysis. Why is it? Let me explain. So maybe you want to buy a share, special share. Then you interviewed the CEO and you read the papers, you read the record, you read everything, and you figured out everything about the special share, because you are using fundamentals about the numbers. What do they have in the pipeline? What do they have for kind of business plan? And all of that, you can spend a lot of times. Or maybe in Forex, you can discover about the Federal Reserve, about the central banks. You can figure out the economy data, and all of that. You can spend a lot of times with discovering fundamental informations. And let me suppose we do that, and we spend a lot of times to learn that, all that stuff. And then you have to decide, okay, should I buy the euro? Should I sell it? Or should I buy this special share? And you said, yeah, okay, I want to do that. I want to invest in this share. So what do you have to do now? What do you have to do now? At the end, finally, think about it. What do you have to do at the end? I can tell you. You have to call your broker, or you have to open MetaTrader 5. You have to open the chart. You have to open the display. You have to type in how many shares you want to buy. Where is your stop? Where is your target? And then you have to push the button to buy. Where can I see that? I can see it in the chart. Because in the book map or in the order book, there are only 3 columns: buyers, sellers, and the price. There doesn't exist a row where you can type in your name. There doesn't exist a column where you can type the reason why you want to buy a share or sell a share or buy euro, gold, whatever. There doesn't exist anything. So even you spend a lot of time with figure out some fundamentals. At the finally end, you have to buy it, and I can see it in the chart without spending all that time, because you did it. I don't. But I can see the same like you. So that's the answer of your question. But we need these guys who make trading by fundamentals. Why? Most of the times the guys or the traders, they work with fundamentals, they have a huge account. They bring a lot of liquidity into the markets. We need them. But we, as private traders, we don't have to spend this much time. This is the question. What was first, the egg or the chicken? So in trading, you don't have to ask this, what is more important, fundamental or technical? Fundamental is not really necessary. And technical is just what you perceive in the chart. Don't forget that, guys. Two of the most famous fundamentals are the COT, Commitment of Traders Report is the shortcut, and the so-called seasonals. So if you use COT data or seasonals, you can see how the smart money works. Because the guys that work with so-called COT or seasonal traders, they have huge accounts, really huge accounts, billions of dollars on their accounts, or millions. And if we can read them, and if we can interpret fundamentals and seasonals, we can see where the big money wants to go. And most of the times it's just only useful for bigger time, from higher time frames. So maybe 4-hour daily chart, weekly chart, something else. Let's have a look at so-called fundamentals. I will show you what are seasonals. Let me show you. I will explain you here right now. So this is a special site. It's Surrogate Trading. It's a German site, but the same exists in English version, of course. But you can see that's the COT, open interest, and two numbers are only interesting for us for an overview about that. So the commercials and the large traders. The small traders are always wrong. That's the 80% that are going wrong in trading. So we have a look at the commercials and large traders. Who are the commercials? Commercials are producers, like farmers, like the farmers who they will plant coffee or wheat or meat or cattle or something else, but the producers, or gold miners, the minings, and so on. Large traders are Federal Reserve or private large traders. So larger like companies, for example, Starbucks, of course. So commercial was the farmer who plant the seeds for coffee and who will make the harvest of that. And large traders is like Starbucks, for a code. Just one example. So, and now we have to see, for example, let's take coffee. This is one wonderful, let's see here's sugar, because I want to show you this one. Where's sugar? Gee, there's sugar. Yes, there's sugar. So you can see, okay, you see, this is the red line are the producers, the commercials, and the blue line are the large traders. So how is it to interpret? So the traders, the large traders are always working with the trend. So if the blue line are facing upwards, then the trade is going to rise. But the commercials are not traders. Commercials are make kind of hedging. So do you have rising prices? Maybe in coffee, the farmers earn a lot of money. But the farmers or the producers, the commercials also know that sometimes or at a special time, the price will decrease because it's a kind of movement and correction. It's always the same. And in that case, for possible falling prices, they build up hedging positions in short. So they build up short positions. So you see, that's the difference. Blue line commercials, large traders, sorry, they always work with the price and going with the trend. And the commercials are not traders. They only make hedging for a possible falling price. And the COT data are only important for us, for private traders, if you use hourly chart, daily chart, weekly chart, for example, if you have extreme positions. For example, this one, at February 2020, we have a high price in sugar. And we have huge short positions about the producers, the commercials, because the commercials know, okay, there will come a specific time that the price of sugar will decrease. And for that case, we have to hedge our price. Therefore, they build up short positions. You don't have to know it very carefully, because it's that you figure out where are the extreme positions. But can you see extreme positions? Then you will know, okay, anywhere in the next time, the price will go in a completely different directions. Let's see sugar price. That was February 2020. Let's see the sugar price. Here we go. So you see, where is it? So you see high price, that's sugar, high price in February. And as you can see, the price decreased down. You can see, and the commercials, or maybe the COT data, predicted it. That's really cool if you can read that and combine it with a special strategy. So, and afterwards, so you could see in sugar afterwards, at around about April, you could see the blue line, the price decreased, and the commercials reduced their short positions because they made a lot of money with the short positions by falling prices, sharply falling prices. So, and you can see in April, we have zero line, 0, 0. So that the two lines were really close to each other at the 0 line, and that means this is maybe the end of a move or the end of this current price. Let's see what happened in April. Look at this one. In April, look at this one. That's the weekly chart. We have increasing prices. It's a kind of prediction, right? Wonderful. I love it. And this is the understanding how you can read, for example, the COT data. So for example, let's make a Forex. For example, I have a special one for you. This is Mexican peso. So look at this one, Mexican peso. Jesus Christ, come on, stay. So you can see in February, we have a high price. So the Mexican peso was too expensive. So the price went up, and the commercials like Federal Reserve, central banks, huge traders around the world build up huge short positions. That was an extreme position. So the prediction was the Mexican peso must come down. Let's see what will happen. What happened? February 2020, just have a look. Mexican peso, you see? Oh, in future, then you say Mexican peso, US dollar. In spot market, you have to switch it from US dollar, Mexican peso. So we have this is a rising US dollar, falling Mexican. Look at this one. February, look at the 33 of February. Look at this one. Falling prices, Mexican peso. Amazing. I made a lot of money with that. So you see, it works. If you can interpret COT data at what you see, what the huge money, the smart money will do. This is a kind how you can read, for example, COT data. Now have a look at seasonals. So the different COT data is based on real numbers. because all the huge traders have to publish their numbers, how much positions they have open. That's the open interest, the market. They have to publish this every week, so we can count on it every week. I also can figure out in this kind of chart. Seasonals are the average of what happened in this special price or underlying or asset in the last 10, 25 years roundabout, what you ever will see. Let's make an example. So you can see Mexican peso in April, it's about the last, or let's take the last years, maybe 20 years. So in the last 20, in average, seasonals are only the average of the last 20 years. It's a little bit kind of prediction what will happen. So let's make one example in sugar. So in sugar, we had in June the prediction that in the last 20 years, we had in June till the end of July, rising prices in sugar. Let's see the chart. Let's see sugar. Look at this one. That's in, we started a little bit earlier. This is the seasonals are kind of prediction, but not really punctually, not really pinpoint, like a pinpoint, you see. But basically, you could see we have a little bit earlier this year, rising prices in sugar, and a little bit later started in July as well, rising prices in sugar. So this is how you can read this kind of fundamentals. Now maybe you know why I said please take a mentor, because you need to know all that stuff. It's not to include in maybe in one webinar. So now you have to create a proper strategy, and because you need, this must be a kind of your business plan, because we have huge and almost limitless strategies around the world and in the internet. And my theory is the Dow theory, based on 5 specific rules. That's the basic of average trading. So first rule number 1, a valid trend is not needed. Of course, Jesus Christ, this is a big mistake. Damn it, sorry. Of course, a valid trend is needed. Jesus Christ. So the maturity of the trend should be maximum 4th trend on. The correction has to run for at least 31%, 38%. Wait for the rebound if you work with balanced candles in Heikinashi. And then rule number 5, from unfair to fair price. This is a quick strategy. And now you can combine it, fundamentals, with your strategy if you want to become successful in trading. So I got a question, sorry. I got a question here. How often can I tweak the business plan? So as often as you want, or as often as it's necessary, of course. With regards to fundamentals, you did not refer to statistics such as the balance of trade. No, I don't know, Ethel. Of course not. That I explained, like I explained, I do that exactly in that way. Your strategy must be statistically proven and profitable, of course. It should be as easy as possible. You know, the bigger challenge is taking place in your mind. I taught you this really very often. The Dow strategy combined with fundamentals like the COT report and seasonals can be very, very powerful. So let's see just one example today, or maybe 2 examples. So how we can do that. So let's take, for example, the price of Mexican peso. We knew extreme positions, again, extreme in COT data for, of course, Mexican peso, we had extreme positions. You can see February roundabout, too expensive. So how we can do that? How we can do it? So maybe switch to the 4-hourly chart, for example, and then this one. So you can see here, gee, I love it. So, no, this one. Let's make, so here we go. So you see, movement, correction, movement, correction. 5 rules. Valid trend is needed, young trend, 38% outcoming of the correction, and then let's go. And that's the point, how you can use this kind of CUT data with a proper strategy. And here you can see it was awesome. It was really, really awesome. And if you use maybe the price, indeed, the price with it, then we can see, so I hope it works in that way. So just sec, then the price will occur. Oh, come on. Yeah, here we go. So, and you could see we went back. Maybe we should take, yes, we can do that in that way. So we came back to the point of control, and then the trend has started away from the point of control, exactly up. So yes, I know the time is up. I have to finish this. Okay, guys. Okay, I'm almost done. So that was one example. Let's make a quick conclusion. Trading is similar to very serious business. I hope you realize that it's serious business. Therefore, please create a business plan. Believe me, you need it. As a part of your plan, you should know the high probabilities are very important for successful trades. Fundamentals, you can combine a very successful and very, very important to support you in trading. But the absolute foundation of your trading should be a proper strategy, maybe like the Dow strategy. And if you can combine both fundamentals and strategy, then you will have a powerful tool in your hands for becoming successful in trading. Guys, thanks. Thanks a lot for your time, for your lifetime. Let me show you this one. I want to invite you to our Trading Spotlight community. Here we go. You can see, oh, there's my camera. Can you see winking? Here we go. So you see we have this chat box here. I have a chat with John, for example. If you can see me here in the camera, you can ask me whatever you want, or of course, Jens and Paul as well. We shared all our trading ideas, the answers with the daily ideas here. Come into this Trading Spotlight community. We have participants, 165 actually coming in. The only requirement, please open a real account with little bit deposit on this account, and then we can work together. And I promise you, we will do everything, whatever it takes, to make sure that you become successful in tradersyard.com. Next Friday, Jens is talking about how to become profitable in Forex trading. What is it? FX trading, about risk money management, and so on. And of course, trading psychology. Please join Jens on Friday as well. At the same time, same spot, guys. Thanks for your thanks for your time. If you have any questions, then come back to us. We will do everything to make make sure that you become successful in trading. Let me say thank you, guys. Thank you for your lifetime. Thank you that you listened to me. I hope you had a little bit value and benefit for your own trading. If you have any questions, book your own interview appointment with me, tradingpersonality.com, or come to Upper Markus or join our Trading Spotlight community, and let's have fun together. I wish you a wonderful day. Have a lovely day. Enjoy the time with your family. Collect wonderful moments for your lifetime, and then we will see each other maybe hopefully next week on Wednesday, or in our group where we can trade together. See you. Bye-bye.